So what we're going to have today is 2 segments. The first segment will be in English, and the second segment will be in Cantonese. For all the Cantonese-speaking buyers that are overseas that have bought, they would like to, I've got some inquiries on what are the foreign purchase taxes and what are the closing costs and taxes. And you shared with me there's so many.
Yes. We have some time today. We can go through. It's actually quite a bit, and I don't know how much details to go through, but I'll try to run through as quick as I can. And I don't have for example, an actual sample, but I do have some scenarios that I put up, and so a $2.5 million home, something like that, and then see how we can calculate what are the things that are applicable, and we'll go from there.
Perfect. Thank you so much.
Yeah. So, anyways, Melissa from eXp Realty. So thank you for inviting me and having this presentation for all of your guests and listeners and potential clients as well from all around the world. Anyways, we have a little bit about myself. First of all, just like a few seconds. I've been practicing real estate for 25 years in Vancouver, and also business and corporations and wills and estates. So a lot of these issues sometimes affect business as well as estate planning. So when you're thinking about buying a property here, but before, we want to focus specifically on taxes. So I'll just begin. So one of my shares. Is it my screen sharing right now?
Yes. I enabled the screen sharing, yes.
Excellent. So what you have here is just a brief, quick summary, a snapshot, if you may will, about some of the applicable taxes and at the timing and the point in which they are applicable. So when you look at the timing of the purchase, there is a provincial BC property transfer tax. I have a little screen here, a little bit about what it is and a little bit about how much in terms of how to calculate. BC foreigners buyer's tax is 20% of the value of the property being bought. Federal goods and sales service tax is on a brand new property, which a lot of the clients are buying brand new ones, and 5% of the price of that is applicable. And then at the time of closing, there was always...
Did you share your... sorry to interrupt you, Ivan. Did you share the screen yet? I think you have some slides.
I do. Let me go get it right on. Here we go. Sorry about that.
It's okay. You're an awesome lawyer. So good. Thank you so much. Always knowledgeable. You give the best presentation. Thank you so much for taking your time.
Oh, you're welcome. Now, I went back a bit. That's a little bit about me and
yes,
where I am and where I'm going. But most important, what are the things applicable? So this is a screenshot. So you have a list of 4 different types of taxes that are payable at the time of the purchase of a property. There's so we start, like I mentioned, BC property transfer tax. I'll go in detail as to what it covers. But the BC foreigners tax, which is 20%, federal goods and services tax, which is 5%, and the portion of the city's municipal taxes that is always apportioned at the time of purchase. So these are payable at the time of purchase, and I'll go into detail a little bit later about what they are. But there are also things you have to consider about, well, once you bought it, then while you own it, there's other taxes. Now, so they have a list of taxes that are being, if you are a foreign buyer and if you are not living in the home or have someone renting or living in the home, these are all the potential applicable taxes that you have to pay while you own the home. So you have Vancouver City Empty Homes Tax, which is only applicable to Vancouver City. But if you're anywhere around Vancouver, not Vancouver, they don't have this tax. But everywhere else, a lot of other places, there's a certain particular 5 areas within BC where then you have to pay the BC vacancy and speculation tax. So Vancouver City Homes Tax is 3%. BC vacancy speculation tax is 2% of the value of the home. And then the city municipal taxes, which are payable every year. I put a little approximate because on average, for most homes, this is the average price that you pay per year. And then there is something soon that just got announced yesterday, which we'll be implementing pretty soon and start paying in 2023, which is called the Underused Home Tax, which is UHT. And then if you sell the home, there's another tax, which is the withholding tax, which is applicable to people who are selling, non-residents who are selling the homes in BC and Canada. So 25 to 50% of the gain. So these are all things you're looking at. Now I want to go a little bit more detail. Okay, next screen, the foreign buyer's property tax. Now, not everybody's applicable, but who does it apply to? Where does it apply? So 20% tax based on the value of the percentage of interest being purchased by the non-resident, non-citizen, non-permanent resident of Canada. So if you buy 100%, you pay 20% of that 100%. If you buy 70%, you pay 20% of that 70% of the purchase price that you're buying. But this is in addition to something I mentioned earlier. It's called the property transfer tax. So how that, and I mentioned it before in a previous slide as a sliding scale. This is the sliding scale. 1% of the first $200,000 value, plus then 2% of anything over 200,000 to 2 million, and plus if it's over 3 million, then you go 3% on top of anything over 2 million. It's a good little way you can calculate. And later on, I'll show you that there's based on a sample, add all these numbers and what it practically looks like. Okay.
So I have a question about the foreign buyer tax. So if, I have a friend, they are declared non-resident.
Yeah.
So now because they have been non-resident, they're thinking of moving back to Vancouver. So they were Canadian, they declare non-resident, and if they're coming back, do they still have to pay the foreign buyer tax?
Yeah. So one thing about the foreign buyer tax, which is important to know, is that if you are a citizen of Canada, citizens of Canada are, how would you say?
Permanent resident?
I'll start with citizen. You can be citizen and then be non-resident for tax purposes.
Oh.
And that is something that they use when they calculate the speculation tax. Are you non-resident for income tax purposes? But for the federal foreigners tax, it really is basically, are you Canadian? Meaning, if you don't have permanent residence, you never were a citizen, then it applies. So if you're a citizen and you became a non-resident for tax purposes and come back, you're still a citizen. So you're still not applicable.
So you don't have to worry about the foreign purchase tax,
right,
even if you declare non-resident.
That's right.
Okay.
Yeah.
Okay,
so
good.
It's really based on nationality almost like, and not really, and you could be a permanent resident in process, but you're still not a permanent resident yet, and you don't have the confirmation. I'll go through that in a few more minutes.
So that's why they also call it foreign national, right?
Right, that's right. Yeah. It's not like a naturalized citizen and then you go back out. They use those words specifically. They want to get those who never had anything to do with Canada before. Even if you come here for a visitor and you went back, you're still a visitor. You never were a permanent resident. You never were a citizen. Remember, as a work permit, you're still not a citizen. You're still not a permanent resident. So, yeah. So, anyways, yeah. So it's kind of like national immigration status rather than tax status. Yeah.
So if you have your permanent resident card, this would not be applicable.
That's right.
Okay.
And one of the things to note about permanent residence card is that the card itself may expire, but it doesn't mean the permanent residency has expired.
Oh.
Meaning you can still be a permanent resident, you just didn't renew your card. And a lot of people who are permanent residents, they have the card, they stay in Canada, they never needed the card to go anywhere, but they will need that card if they were to travel out and back into Canada. So something about permanent residents, if all those out there who have permanent residence card, oh my God, it expired, what happened? That's another matter. That's a whole nother immigration issue. So anyways, this foreign buyer's tax is really meant towards anyone who's foreign, not Canadian, not a PR. So go on to a little bit of an example. I mentioned about having give you a sample. So say...
Sorry, I have another question about this foreign purchase tax. I read somewhere online that, foreign national, they can buy commercial real estate. So then there's no foreign purchase tax on commercial property. That's
right, yeah. You're correct about that. And the idea is that the whole tax was meant to free up residential markets for people to have more affordable homes. It's nothing to do with business. So all the taxes applicable here is really for like the ones that for non-foreigners tax are concerned about.
And another question is, some people say they can set up a trust account to kind of like go around and avoid it. Is that something to do, or is it too complicated, or should not do it?
It is very complicated. An idea is that there are trust rules, and there's also people also speaking on the same topic. Some people talk about just form a company and blah blah blah. So there are certain rules about companies and also trusts that you have to go into further details. And then one of the tests, which I think I allude to later on in some snapshots, is control. Who has actual control of the trust? Who actually controls the company? If the person who controls it, no matter what mechanism used, like the trust agreement, the corporation, the partnership agreement, and there's control by anyone overseas, boom, then it's an overseas tax. It's control. You can have 6 owners. Hey, I've got 3 owners in Canada. I've got one owner in Hong Kong or in China. So you have 4 owners, and you think you can get away. but they find this agreement that the person in China or overseas is the one that controls the people in Canada, what they do or say, where the money is coming from, then that's a backdoor in for CRA to look at and investigate and then ding you for that tax.
Okay.
So it is doable, but you have to be aware of trust rules as well as corporate rules. And I'll talk about that in a minute. And you know, as we go down through the different types of taxes, they also have a different meaning of what they mean by control. And see that there's different percentages, the 25% ownership or 10% ownership, etc. And they use a different standard here and there. So it's important that if you do decide that to go that route, to make sure you know exactly what you're doing. As you mentioned before, how about someone who's a citizen but non-tax resident? Well, it only applies to non-citizens, non-permanents, and also people, some individuals that may have applied for permanent residence. There's a BC immigration program called the PNP, Provincial Nominee Program. And you have to apply for it. It speeds up and facilitates immigration to Canada because you have the support of the BC government who accepted the person to immigrate here. And what they give then is that if they accepted by the BC government, they give them a nomination paper with a number. And you buy a home and you are a provincial nominee accepted provincial nominee, you would have that certificate and you can apply and you can be exempt from paying this foreign buyer's tax because you've been accepted by BC to immigrate here and become a PR. Now, the key thing about this is people who have that nomination for certificate, there's a deadline, there's a time frame for it, there's an expiry date, and if you don't buy a house during that time frame, then you can't use it. And if you at some point before the nominee expires, it's just like an open invitation to apply to immigrate. But if you don't apply and it expires, you have to start all over again. That's important. But the thing is, some people may have bought the house and then become a PR. And so there's a time to apply to refund. So if you see this next week,
you can get a refund even after you pay and you become a permanent resident.
Right, that's right. But you have 12 months from the date in which you paid the tax. So you gotta, don't count your chickens before they hatch, I would say. But try to push it if you can. You got a time frame, and they're pretty strict with that time frame. 1 month over, they still say, too bad, you passed the time frame. You came to PR late. Yeah. And another thing too for the exemption, and don't know how down the line whether there's going to be any appeals and audits from the foreign buyers tax department. One of the conditions is that this home that you want to buy as being exempt from this tax is supposed to be your principal residence, right? Intention for it to be. Now, if you intend it to be, and then somehow the immigration process turns out bad, like for example, in the last 2 years, people may have gotten that process, but then they can't even leave to come here. So it wasn't their intention, but then they were, frustrated by the idea that the pandemic came and they couldn't use it as their principal residence, but they fully intended to. So that could be an issue that I don't know if it's been litigated or appealed, or if there's an audit based on that. But I think, that the notion of principal residence can be an issue down the line for a lot of people who get the exemption and then find out that they couldn't prove that that was their intention, but they had to prove that intention. Okay. So next thing, permanent residence, I mentioned, like some people, you mentioned about somebody who may have a PR card, but it may expire. So one thing, if you have any of these three things, a record of landing of coming to Canada, a confirmation of your PR or PR card, any one of these is evidence that you are a permanent resident. But these things do expire, so you got to make sure that they're not expired. Okay, now you talked about trusts and companies, so I just want to briefly touch about this. Companies can be foreign if they're incorporated outside of Canada and then coming in to buy a property, but it can also be foreign if you're a Canadian company. If 25% or more of the shares are held by someone who's not Canadian or indirectly controlled by non-Canadian. So you can have non-control even though you don't own only 10% of the shares, but you have a shareholder agreement that says my 10% is worth 80% of the votes on the board of directors. Well, then you've got control. Even if it's less. So you'll notice that at some point that how they define control and share of the profits is, they use those two ways. How much percentage of the profit you get to determine if you're foreign or not, and also the control. So two things, how much you control and how much you get. You get more, you control more, you pay, you're a foreigner. Tax becomes applicable. So that's why they have to dig in further to any kind of a trust agreement, any kind of a corporation, to find out the real ownership and money, where's it going. Of course, foreign owners tax, the foreign buyers tax applies to only certain areas. So if you look at my next screen here, Victoria area, Fraser Valley, Metro Vancouver, Central Okanagan, the Nanaimo area. So the idea is that how do you avoid the tax in BC? Well, you buy it somewhere not in these places.
Prince George.
Yeah. Prince George is not here. Okay.
Prince Rupert. Haida
Beautiful places, mind you. I have nothing to say about all these other places which are non-urban, but they're beautiful places. I would love to go. I'm not sure about living there, but I'd love to go. But these are beautiful.
Haida.
Yeah. You don't want, if avoiding this tax is really important, go somewhere else, right? So, in